Good morning, traders. Today is the 20th of May, 2021. My name is Neville Hornsey, market analyst for YouTrading, and today I'm going to be talking about the euro versus the Japanese yen. Okay, so good news out of Europe today is that the European Commission have decided that member states will be allowing people to travel across borders if they are fully vaccinated. So that's good for commerce and tourism. And it's good for the overall Eurozone economy, which is good for the euro. That's why we're looking at this bullish euro here versus the yen, because the Japanese authorities are actually starting to lock down harder on their major trading hubs as the coronavirus is disrupting their plans for holding the Olympics and things like that. So the euro is currently, well, has been for a while now, been appreciating against the yen. I've got here the 2008 highs before the great financial crash, these big red candles, all the way down to 2012, which was then found support at the previous swing lows from 2000. So this demand area here acted as support. We went back up. We did a big sort of deep retracement of the great financial crash move, almost getting up to the 76.4% retracement, but we were capped by the 150 level here. Since then, we've had Brexit and we've had obviously the coronavirus. So we've got these swing lows and swing highs, but the also overall downtrend from 2008 has been broken now. We've got several green bullish monthly candles coming off the breakout from like 1265 to 1268 level. You can see that the moving averages on this monthly chart are starting to curl up. We've got the 20 above the 50 now. That crossed last month, and then they're going to look like this 200 period moving average. This 200 period moving average is kind of sideways, sort of showing that prices are within this great financial crash range. But the movement up sort of suggests that this momentum is strong and accelerating, as can be seen by just looking at the green candles. You can see that they're closing nearer to their highs than they are to the middle or the lows. Right, so we've got bullish momentum, bullish price action. We're taking out previous swing highs. So this September 2018 swing high, that's been taken, and now we're going to be attacking the April 2018 swing high here. If that gets taken and there's no sort of significant selling pressure up there from previous sell orders, then we'll cut through that price action. And if I move down to the weekly, you can see that if we can get above this sort of double top, if you like, from 2018 with some conviction, then there's not a lot here in this candle from February 2018 that would stop us from just cutting through those prices all the way up to sort of like towards 138. Obviously, we do have potential supply coming in at those levels. So we'd be looking to see if this little box range here would act as potential resistance. And I'm sure at the first time of asking, it would. So we're on the weekly chart. You can see that the 200 is below the 50, which is below the 20. Everything's pointing upwards, sort of showing that the weekly chart is momentum's to the upside. Going to the daily, the range is getting a little bit tighter. So if I put a channel up, we can say through those three lows there, that's significant sort of support. And then if I take it just to the highs, we'll go to the sort of highs of the close here. So we're in a tight range now, moving higher on the daily. The golden cross happened back in June 2020. And ever since then, we've had one significant sort of correction here, sort of from the end of August all the way down to the 1st of November. And then when that broke out, that's when we've had this impulsive move to the upside. So we are grinding higher now. Price action suggests that up until yesterday, which was an indecision candle. These green candles were, the bodies are a lot bigger, showing that the sort of bullish buying pressure is overwhelming any sort of selling pressure at the moment. Yesterday was FOMC, so there was sort of uncertainty in the markets overall. The yen, like I said, there's no real reason to be bullish the yen at the moment. The global economy is kind of stagnating. There's no real material change in whether it be worse or better than it was a month ago. Then we've got the potential that we could come back down on this daily chart to test the 50. It hasn't been tested since March. We almost tested it again in April, a month later, but it didn't quite get down to the 50. So there is a potential that this indecision candle is the start of a slight pullback. With Europe opening up and Japan sort of locking down further, I don't think we're going to get much lower than, say, testing this previous resistance, sort of like, unless there's some new information comes into the market. So a pullback down to the 1.32 level, and then retest the previous resistance, now support, and then a break higher is what I fully expect. However, I'm wrong if we get below, and then we sort of retest back underneath that before breaking down. If we were to break lower and I was completely wrong, then this balance area would be where I'd imagine prices would find it difficult to get through, considering the sort of European bullishness. But yeah, never say never. For now, I'm looking at seeing if we can get above yesterday's high. That would be bullish, or if we can just sweep lower and then sort of hockey stick higher that way. Okay, I hope that was useful, and you can profit from that in the future. Keep an eye out on any European news, and especially any worsening Japanese news. And then we shall catch up with you tomorrow.